What's going on, everybody? Welcome back to the channel. It is the 9th of February. We are going to be looking over at Vanguard at the ticker symbol VOO, the Vanguard S&P 500 ETF. One of the best investments for most people is simply buying a stock market index fund, holding it for a long period of time. Even better would be in a retirement account, a Roth IRA, and doing nothing else. Don't try to buy the tops, sell the bottoms. You know the game. People have a very hard time picking stocks. One of the best things you can do is buy a stock market index fund and do nothing else. Today we're going to talk about the VOO, the Vanguard S&P 500 ETF. Let's take a look over at the Vanguard website. Guys, welcome to the channel. So we're going to look at VOO, Vanguard S&P 500 ETF. This is the Vanguard website. I'll leave a link for this down in the video description. Instead of trying to buy individual stocks, and of course, I'm a trader, there's nothing wrong with that. But for most people who are busy, families, jobs, school, etc., trying to pick stocks is basically overwhelming. Most people don't know where to start. One of the best things you can do is buying an index fund and holding it for a long period of time. Perhaps you can hold it in a retirement account. You can contribute to it weekly, monthly, yearly, daily, whatever works for you. I know in the Vanguard accounts that I have been on, my Vanguard account and some other ones, they actually have an option now where you can purchase a dollar amount. So it wasn't long ago that I recall Vanguard, for instance, the VOO, you would need to purchase at least one share of stock. For example, the market price right now on the Vanguard website from yesterday was $377.47. That's shown right here. So if you didn't have at least that amount of money in your account, you were not able to invest into this fund, the VOO. Vanguard has recently changed that, at least for the accounts that my account and the accounts that I have been on. You can actually purchase a dollar amount, a specific dollar amount. So if you want to invest $20 per week or $20 a day or $200 a week, whatever the case is, you can now do that. So it really, really opens up the doors to lots of options, lots of different budgets. It's really a great thing. So you can set that goal of, let's invest $20 a week or $20 a day or $200 a month. And you'll have a cost average over time into, for example, this Vanguard fund, which is an S&P 500 ETF fund. Let's scroll down a bit to the product summary real quick. So this fund invests in stocks in the S&P 500 index, representing 500 of the largest U.S. companies. So when you buy this fund, this VOO, you also don't have to buy this within Vanguard. You can buy this within other accounts, but I know the specific dollar amount you want to invest, I've only seen that in Vanguard. For example, if you're in like one of the brokers I use, which is Tastyworks, if you want to buy $50 worth, I don't think you can do that outside of Vanguard. I could be wrong, but I don't believe so. You have to buy at least one share of stock. So this holds 500 of the largest U.S. companies within one basket. So when you buy one share or, $100 worth of VOO, you're getting a little piece of all 500 of those companies within one simple share of stock. And it's an average of all of those is how it performs over time. So instead of trying to pick a good entry in Microsoft or like Johnson & Johnson and trying to sell it at a higher price, if you're going to go long that stock, you could put that all aside and just simply pick a specific amount of money or whatever you can afford at the time or over time and just buy into a simple index fund and dollar cost average in over, your working career or whatever that period of time is. And the history of the stock market shows it going up over time. So it's one of your best investments you can do is just simply buy an index fund and keep your day job. I'm not saying that trading isn't a fantastic opportunity. It really is. But for most people, they don't really want to put that time in, or they don't have the time or the resources to figure all that out. So if you could simply have a retirement account or even just a regular brokerage account, buy an index fund, the VOO is one of many, but it's a really good one. Over time, you will do very, very well over the long term. Doesn't mean in a week or in 2 weeks or in 2 years that you'll be up over the long period of time. Warren Buffett, Charlie Munger, some of the biggest, best investors, highly recommend buying an S&P 500 index fund and holding it over your lifetime. Also, this fund does have a dividend. Right now, the 30-day SEC yield is 1.57%. I believe the distributions are quarterly. Let's check this out, see if it tells us here. Yes, distribution schedule is quarterly. And then if we scroll down a little bit, it'll show you the dividend history here. So the payable date, you have 12/10/7/3. So a quarterly basis, you'll receive a dividend based on the amount of shares you have within this fund. Let's go back to the overview tab. Like I said, I'll leave a link to this page down in the video description. Goal is to closely track the index return, which is considered a gauge of the overall U.S. stock market. Offers high potential for investment growth. Share value rises and falls more sharply than that of funds holding bonds. More appropriate for long-term goals where your money's growth is essential. So the younger you can start this, the better. That doesn't rule out that if you are older that you shouldn't do this. It is still a very good option. But the sooner you can get your money growing, compounding, collecting dividends, the faster the larger it will grow, I should say. It'll snowball and start to grow faster and faster. But the sooner you can start that, the better. So let's scroll down a bit here. So it actually tells you right here, which I didn't see this before. So the minimum investment as of yesterday is $1. So that goes back to where I was saying that you don't need anymore, at least in Vanguard, to have enough to buy a full share. You can specifically there's a tab, you can just click dollars and you can invest a dollar amount. So if you only have $20 or $50, you can still invest in this fund and start. You don't have to wait till you have the $300 or $377, which is the share price yesterday. So let's scroll down a bit, guys. So here is some interesting numbers here. So we have since the inception of this fund, not the S&P 500, just the VOO ETF, we have a return of, let's see here, 374% return since 2010. And we are currently in 2023. a 374% return. Let's see what else we have here. Let's scroll on down. Here is the share price over time. So it looks like this goes back 10 years. So back in 2013, it looks like we were around a $70 price. 2019, 248, 269, and then currently, as of the 31st, we were $373. So we've had a nice rally here so far this year for the stock market. Let's check out Actually, we should be able to see some of the holdings. Here we go. So it looks like we have some Apple, some Microsoft, some Amazon, some Berkshire Hathaway. So if you can't afford a share of Berkshire Hathaway stock, if you invest in an S&P 500 fund, you'll actually hold a portion of Warren Buffett and Charlie Munger's company, Berkshire Hathaway. Google, United Health, Johnson & Johnson, ExxonMobil, JP Morgan. Guys, the list goes on and on. Let's check out a couple more. Tesla, Home Depot, Pfizer. Let's check out a couple more. Most of you probably have heard of these companies. Walt Disney, Philip Morris, McDonald's. I'm sure some of you like to eat there. What else do we have here? Check out a couple more. Amgen, Salesforce, Adobe. I use Adobe Photoshop. There you go. You will be a shareholder of Adobe. So, and here's the more dividend information. Let's check out some charts. Let me see if I missed anything here. Once again, VOO is the ticker symbol. This is the Vanguard website, and I will leave a link to this down in the video description. Let's go check out a chart, guys. So here we are on tradingview.com. This is a free service. You can get a paid subscription. You don't need it. I use the free service every day, many hours a day. It's great. It does enough. You don't need a paid service. This is the weekly chart of the VOO, bringing us back to, it looks like, that 2010 time frame, the inception of the VOO. Down there, it looks like roughly, I guess that was $100 down there at that price. I thought the price was lower on Vanguard. And you can see where we are currently at right now, 376. Let's check out the, I think that was actually correct, the push percentage. That's saying it's about 200 or so. So one of the good reasons to invest in a stock market fund, or in the general or the total stock market like a S&P 500 ETF, is instead of trying to pick market bottoms, buy the bottoms and catch these rallies, which sometimes you might get lucky, and there are people who can do that, and they do very well. Also, the flip side of that would be to sell at the tops and avoid these downtrends. It's like I said, it's not for everybody. It's not easy. If it was, wouldn't everybody do it and do it really well? That is simply not the case. Not saying it is impossible, because it is definitely not impossible. But for the working person working, a standard 8, 10, whatever it is, hour job, has kids, family, all this stuff, simply sitting on the computer for many hours a day, trying to buy stocks, find and sell the tops, is simply just not a reality for a lot of people. So another thing you can do to be involved in this massive, massive opportunity to grow your wealth is just to simply buy a index fund like Mr. Warren Buffett and Charlie Munger tell us to do. Simply buy the S&P 500. The sooner you can, the better. Hold it over your lifetime. If you can, hold it in a retirement account with tax advantages. Collect your dividends over time, and you will retire with a lot of money, guys. People always say, isn't investing risky? It depends where you're trying to go with that. I look at it as, I think not investing is risky. Not having your money work for you is risky. And here's the reason. You can only work so long. Now, I'm not saying some people don't work till they're 80. Some people do. Some people work longer than that. But realistically, most people don't want to work, or probably don't want to work, I should say. I don't know everybody's story, of course. So when your working career ends, in theory, the money coming in will end as well. But if you have your money working for you and you start sooner rather than later, it will snowball and grow over time. And as it grows bigger, it will collect more dividends and even grow faster as your working career is starting to come to an end. Social Security, for most people, is kind of enough to get by. Are you living the high life? Not necessarily. You don't want to count on one source of income either. Many people do it. I'm not saying it's wrong. It's just not what I would personally want to do. The more diversified you can be with different sources of income. So for this example, this would be stock market income, and you would be generating, not only would you have the market gains from over, 10, 20, 30, 40 or so years in the market, as that account grows and the dividends get reinvested, you could actually pull them out in your retirement account and you'll have another source of income. So yeah, you might have your pension from your career. You might have, some Social Security, maybe some other annuities or something. And then you'll also have this dividend income that could easily be the biggest chunk of income out of all your incomes if you start and invest early enough. So it's something to consider, guys. I'm not a financial advisor. I highly recommend that you do more research on index fund investing. I'll leave a link for the Vanguard VOO page. Research Warren Buffett, research Charlie Munger, research index fund investing. I believe it's written by the Vanguard founder, Jack Bogle, who has passed. I believe it's called The Little Book on Common Sense Investing. It really does a great job in a simple way of breaking down investing in index funds and so on. Do some research on Berkshire Hathaway, Mr. Buffett, and Munger. And as always, I appreciate you guys watching. Let me know your thoughts down in the comments. And head over to the Vanguard site. Check out VOO. Do a little bit of reading. Look at some of the stocks that it holds within that fund. And it's not the only fund. There's other funds. There's other index funds. You don't have to necessarily use the Vanguard S&P 500 fund by any means. But it's been around for a long time. So that's why I use the VOO. Appreciate it, guys. Hit that thumbs up. If you are not yet subscribed, go ahead and do so. And I will catch you guys in the next video. Markets are a bit wild the past couple days. A lot of volatility. And having some fun watching the futures trade up and down as well as the cryptocurrency markets. All right, guys. Take care.